Michael Saylor says, I have this mega problem. I have $400 million cash and it's melting away like an ice cube. What am I going to do with it? So he looks at gold, he looks at land, he looks at bonds, he looks at stocks, and he just sees issue after issue after issue after issue.
From the Blue Form Media Studios, this is the 435 Podcast, the pulse of Southern Utah.
If you're looking for a nice cup of coffee and you're in downtown St. George, FS Coffee Co. That's where you're going to want to stop. It's right there on the corner of Tabernacle and Main Street in downtown St. George. So if you got a bicycle, ride it on down there and grab a drip coffee and tell them the 435 guys sent you. I listened to the interview we had last time, and I cut you off a bunch. I was like, man, I should have just let him talk more. I really felt like I was...
This is a podcast. We're supposed to talk. We're supposed to interact. So cut me off as much as you want.
Well, I felt like we could have kept talking for 2 more hours last time.
Yeah.
And
we
talked for 2.5 hours last time.
If you ever go back and listen to yourself, I went back and listened to that podcast. I was like, what the hell were you doing? Like, what were you saying? You sound like a goof. You look like a goof. These people are, I'm sure they're like listening, like, who the hell is this guy? Like, he lives around us, so we should be scared. It was kind of eye-opening. Again, I've done maybe 10 podcasts in my lifetime. And this last one, I was just like, get over yourself.
Yeah.
You're old. You're starting to turn gray. You're going to lose your hair. You're not as strong as you want to be. And yeah, you're sunsetting. So
and sometimes we say stuff or don't ask a question that seems so obvious in retrospect. Like, oh, I should have said that afterward. Like we did a podcast a couple of weeks ago about real estate and finance and just like what's the state of the market.
Yeah.
And we were talking about tariffs, but we caveated it with neither of us were experts in tariffs. And a statement was made, and it was just been like this constant stream of comments about how we don't know anything and how it's like, this is why freedom of speech. This is the worst part about freedom of speech is that everyone has a podcast. I'm oh my gosh.
Yeah. If you're not an expert on it, you shouldn't be talking about it.
The keyboard warriors that jump in, and start chiming in.
Yeah.
Look, like this is how I learn is talking. Yeah. I've always thought that, if you're not good at articulating something, then you don't understand the concept very well. And these really put you front and center. Like, hey, we're going to record this. We're going to put you down on record, and you're going to say what you're going to say. Yeah. And so I'm just going to caveat this right now with like nothing I say is financial advice in any way to anyone. So don't ever reach out to me and accuse me of saying something that has been construed as financial advice.
Well, it's funny because like
it's not.
How do you become an expert on something? Like if you're not allowed to talk about it, how are you ever going to be an expert on something?
Yeah, and I think also there's so many podcasts out there that are trying to hit this mass audience. Mm-hmm. This is so unique to just Southern Utah. This is like, I just want locals to be able to hear from other locals.
It's a cool idea. I like that.
Understand the world from where our view is. Not everything is going to be perfect. We're going to make mistakes. I'm the first one to admit we're going to make mistakes, and we're going to correct them as much as we can. But I like the comments that come in. It's like, oh, you looked at that wrong. I'm like, oh, actually, that was helpful. Now I understand it better, and it'll challenge my thinking. So
embrace the comments, good, bad, ugly. You embrace them. You just let them fly. And
so we were talking a little bit about Michael Saylor, right?
Yeah.
And so explain to me maybe a little bit of the history with Saylor and Bitcoin, and how he's created this basic treasury with Bitcoin.
Yeah. So Michael Saylor is a very fascinating individual. He wrote a book called The Mobile Wave in the 1990s. He was a business entrepreneur in the late like 99, 2000 .com boom era. He had a very, very successful business. His book called The Mobile Wave predicted the advancement of our mobile phones. Mm-hmm. And how they would basically take over our lives. And he did it so far in advance than other people. Very fascinating book. But that's not what made him famous. What made him an interesting chap is what you're alluding to. Michael Saylor, later on in his lifetime, actually, there's a cool tweet. I don't know, we could look it up real quick. But he opines for the first time about Bitcoin pretty early on. I think it's in 2013. And he basically says, hey, Bitcoin's going to go the same way as online gambling. It's just a bunch of degenerates. It's a worthless currency. It's not going to do anything.
Yeah.
This one says Bitcoin days are numbered. It seems like just a matter of time before it suffers the same fate as online gambling. December 18th, 2013.
2013.
Whoa, nailed it.
So thank you so much for looking up. The context is super important. And sometimes, talking and looking things up. So I appreciate you doing that. So yeah, he's on Twitter at the time, and he's tweeting, and people looked at him as a CEO and 51% owner of his company called MicroStrategies. He's a billionaire. Looked at him as
he was a billionaire back then.
Oh yeah.
Okay.
Oh yeah. Looked at him as this fascinating individual that predicted the mobile wave and was really forward thinking. And so they asked him on about currency, and libertarians, different people would say, "Hey, what do you think?" And that was his response.
Yeah.
Fast forward to 2016, I believe. No, excuse me. Fast forward to COVID. That's
interesting.
That's actually when it happened. So COVID comes along. This is 2021, and Michael Saylor, he describes it as, I have a mega problem. I have $400 million in cash, free cash in a bank account, and it's sitting there. The government has taken away the ability to have my workers continue to work. All my clients, Cisco, Google, Microsoft, because he owns a data intelligence company, MicroStrategies, they were all shutting down. And he basically had no way to really continue the cash flows of the business of his Fortune 500 company. At the same time, he had this cash was sitting there. And he recognized the fact that they were going to print something to the tune of 40% of all cash that's ever been printed. They did it in 1 year after COVID.
It's like $4 trillion in 1 year.
It's stupid amount of money. You guys have no idea. A trillion is really hard for people to conceive. Mm-hmm. And one of the coolest things to do is look how long a billion seconds is, a million seconds is, and look how long a trillion seconds is. Go ahead and look at the differences between that. Why don't you Google that while I'm keep going? So Michael Saylor says, I have this mega problem. I have $400 million cash, and it's melting away like an ice cube. What am I going to do with it? So he looks at gold, he looks at land, he looks at bonds, he looks at stocks, and he just sees issue after issue after issue after issue. Well, if I put it over here, I've got this risk that I can't evict people if they don't pay their rent. If I put it over here, well, quantitative easing took the interest rates to zero last time. I'm like, how am I expected to make any money off of bonds when
they don't make money themselves?
They're worthless.
Yeah,
and they will be with more time and more printing. How am I supposed to make money in the stock market during this environment? If you remember, cruise lines, airlines, every lines
might as well be online gambling.
Exploded, right? Imploded.
Going the way of the online gambling is like stock market would have been online gambling at that point, right?
Yeah.
Magnificent Seven, those 7 stocks basically floated the entire market for all through COVID. It's just crazy.
You're exactly right. COVID during that time was nuts, right? People on CNBC was like, the world's ending. It's over. You're stuck in a coffin for the rest of your life. Lock her down. So he's looking, I can't do stocks. Like, what am I going to do? Put it in land. I'll just go buy some land. He's looking at, okay, well, what's to stop a hostile government like our own here locally to come in and say, hey, there's not enough money anymore. We're just going to raise taxes on the land because they can. And that's what they've done before in the past. So what are you going to do there? Because you can't stop that. So ultimately he looks at all these assets. He's like, what are we going to do? And he remembers Bitcoin. And one of his buddies in Miami starts to what we call orange pill him, which is the whole red pill, orange, or red pill, blue pill in the Matrix, right?
Yeah.
There's a meme in Bitcoin sphere. It's the orange pill, which is the third option. And anyway, so his buddy starts to talk to him about Bitcoin, and he comes to the conclusion, being an MIT graduate engineer in aeronautic, he's a rocket scientist actually, comes to the conclusion that Bitcoin is engineered money, the most ethical money on earth, decentralized, permissionless, all the different properties that make it superior to gold. And because of that, he makes the decision with his board. He brings his board together, and it's fascinating podcasts about him talking about through this process, how he had to get his board and convince them that this is the best case.
Yeah, this is where we should go.
So he educates his board of directors the board of directors offer a buyback option for any stockholder that currently has it. I believe, don't hate me for this, Michael, if you heard this, Michael.
If you hear this, please definitely message us.
Michael Saylor, please. If I recall right, he gave them a 20% premium on the stock buyback purchase if they didn't want to go with
that direction.
a big Bitcoin direction. Some people took it, some people didn't take it. And ultimately, they decide with the board to go onto a Bitcoin standard, and they did an initial purchase of $400 million in Bitcoin. Why is this significant? It's significant because it was the first time since the inception of Bitcoin we had anybody at that level, publicly traded company, CEO, well-known, billionaire, willing to put down substantial money. Not only that, willing to talk about Bitcoin in a way that was educated, understood the principles behind it, and explained very well, reasoned very well with CNBC, Fox Business, and openly why this is important. Since that point, Michael Saylor, accumulating his initial purchase of $400 million, now owns a little over 500,000 Bitcoin.
Wow.
Which out of 21 million Bitcoin is a substantial, he is the single largest owner of Bitcoin on earth today. And granted, he started accumulating or hodling around 2021 with this company.
That's crazy.
He personally owns Bitcoin himself, not just his company. And it's important to say that he's a majority owner in his company, which allowed him to do some things, even as a publicly traded company, allowed him to make these decisions without the influence of his stockholders in a way that would shut him down from doing that. So there were some special circumstances in which he was able to do it. But now he is considered literally the mega Chad of Bitcoin.
the mega Chad.
Like he's the ultimate warrior.
So there's, you were talking about having him stop buying as much as he has. Kind of, this is one of the thoughts with that limited supply is that you can now, one guy owns, let's say, let's call it, 5% of all the Bitcoins that are out there. He can independently move the value of Bitcoin up or down, right? You were talking about how he moved it just today.
Yeah, I mean, when we say move it, right, we can all move Bitcoin. If I placed a large order, make it a certain time frame with low volume, extreme leverage, right, with enough money, you can move almost any asset, and that's how financial markets work.
Yeah, I think J.P. Morgan owns like 40% of all the silver, like the hard asset silver on the planet. Like J.P. Morgan Chase owns silver in vaults, like 40% of it, so they can independently move the entire market.
Yeah, and with leverage, you can do anything, right? Let's say I have $100,000 to invest in some of these markets. Again, Bitcoin is traded actively on the world market. It can be traded at 50x. It can be traded at 100x in some of these places. Wow. So if you have I have $1 million, you can trade at 100x. You're trading $100 million in Bitcoin. You can move the market.
Yeah.
Now, that all being said, the market of Bitcoin today versus the market back then is substantially different. The market of the Bitcoin today is an $80 billion a day, 24-hour market. That's a lot of liquidity.
Yeah.
That's a deep, think of a stream that's only a few inches deep, and then think of a stream that's really deep in the power. Even though it moves slow, there is a lot of value.
Maybe now's a good time to break down 1 million seconds as 11.5 days.
Well, why don't you ask? I want to hear your guesses. See, that's the funnest. Go ahead and ask
I think I've heard this before. A trillion seconds is like 1,623 years or something like that.
Okay, let's go to a billion. So 1 million is what?
11 and a half days.
11 and a half days, 1 million seconds.
A billion seconds
is like 15 years.
31.7 years.
Way off.
Trillion seconds, 31,709 years.
Again, way off.
31,000 years. I mean, a trillion seconds.
Just that number right there, 31,000 years is, you can't even fathom that.
So the jump is, billion is 32 years, which is a lifetime. I mean, a third of a lifetime. And then you go to 31,000?
31,000 years.
So do you...
Yeah, conceptually, it's people, and I've said this last time on the last podcast, I don't think people can comprehend what a trillion is.
You can't.
They can't understand like how much money is this actually going out, and then when you stack them in dollars, right? It's like 15 city New York blocks that are like 30 stories high.
Yeah, the
right?
visual. Google the
visuals.
Visual
The visuals are
Capitalist. If you go to visualcapitalist.com, go look at that.
Yeah,
you can see you stack the dollars. It goes way past the moon if you just stacked paper.
Just hundreds, but yeah, it's
crazy.
It's insane to think about. And so when we're talking about this balloon, the U.S. debt is $34.6 trillion, going up $1 trillion every 100 days. And we're on the verge of going up every 90 days is going up to $1 trillion in debt, that we're just the interest on the debt.
$2 trillion deficit, right? So each year, $2 trillion guaranteed.
And our GDP is only like 25 trillion a year, 27 trillion.
We are broke.
We're broke. And so when we see the stock market shift the way that it has today, you could see this flight to good money drives out bad. We talked about this on the last time we talked about it, right? It's good money will drive out bad. And so as these transitions happen, I think there's some patriotism attached to this dollar. And I wonder, how long is it going to take? Is it going to take like a massive crash for people to be like, oh, I'll go use this Bitcoin instead of the dollar? Because do you think there's something to that? Is that I want to use a dollar and I believe in the dollar because I believe in the country? Do you think there's an attachment to that?
Yeah, I do. I think, but before we talk about the politics of it, there's just a free market principle, like fundamentally. If there's a great author by the name of Saifedean Anamus. He did the Bitcoin Standard and also Principles of Economics and the Fiat Standard, 3 books. Incredible author. If you look in his books, you learn about money and the most sellable good, the thing that you can sell the easiest emerges as money. So, and government doesn't create money, it does in our lifetimes in terms of this is the dollar, this is what it does. But before governments existed, money is emergent. It comes out of a society's simple need for bartering goods and it emerges organically from that need to barter.
Yeah, Creature from Jekyll Island talks a little bit about that.
You're exactly right. Yeah. The Creature talks about, and that's important because we can go from salt to seashells to spices to furs to rocks to certain jewelry to tulips to gold, a gold coinage. We could go to land. There's all these different things that people barter with. It's the most sellable thing that is actually considered the money. So
and in that market, because every market is going to be different, right? Sure. And so it's like the market in one area of the country, it's going to look different than another area of the country, but it's the most sellable good in that market.
Right. So when we talk about what is it going to take for these people to change or consider that, fundamentally, when they need to sell something or barter, I'm selling my dollars to McDonald's when they give me a burger, right?
Right.
They're selling me a Big Mac. I'm selling my dollars to them.
Right.
People don't think that way, but that's what's happening here, right?
Yeah.
So when there's a fundamental need, a baseline for any person to do business, they will do it regardless.
Right.
If I have to take this iPhone 16 and I have to go down to Maverick right now, and I have to get a tank of gas, do you think I could find someone to trade this for a couple tanks? Or
yeah, probably.
Yeah, this is pretty it's valued universally. It's something that somebody would desire.
There's utility.
So the point is I can take this. I can say, hey, this could use this as a barter, as almost a currency. It's almost that much. It's almost universally used that much in our society today that you could almost buy whatever you want with iPhones. You really could. Point. So it just depends what you want to do. Are you trading this or that? Now, when it comes to the patriotism part, we care about our country, our people, our communities. We care about 435. We care about our St. George community. If it came down to you can use this evil currency and get kickbacks from the federal government, but you have to do all these conditions, or it means we band together, the 3 of us, the 30 of us, the 300 of us, the 3,000 of us decide, no, we're going to do this different. We're not going to use that currency because we don't feel like it's ethical. We don't feel it's right. I think there's some fundamental principles in just moral that you could argue from a political, moral, or fundamental free market principle to I'm going to make a change. Yeah. And this is why I'm doing it.
Yeah. So how do you? I guess let's talk about Roger Ver. So you had Michael Saylor, and he's led this charge. Let's go back to Saylor for a second. He's leveraging and collecting Bitcoin. You were talking about it being a treasury. Can you explain?
Oh yeah. We kind of didn't get into that. So what Michael Saylor did after making his initial purchase of 400 million in Bitcoin, he decided to move on to what is called a Bitcoin standard. what he decided for his company was we are no longer going to denominate or report our balance and our profit and loss or balance sheets. We're no longer going to do that in US dollars. We are going to do that in Bitcoin. And so he basically converted all of his assets, his cash, free cash assets, and he converted it into Bitcoin. So on their balance sheet, they denominate everything that they have in Bitcoin terms. And so that's fundamentally the idea behind a Bitcoin treasury is instead of a treasury like the city of St. George has a treasury or a company has their own treasurer, instead of using dollars, they just simply didn't, or pesos or yuan or any currency, they decided, hey, we want to use Bitcoin for it. And he moved that way pretty quickly. Since that, his business exploded in terms of value. He's MicroStrategy stock, if we took a look at it. In fact, we should take a look at it real quick so I don't misquote it, but it's MSTR. So if we went to stocks here, and I haven't looked at it recently, but we go MSTR is the ticker. And if we take a look at that, you got to turn off airplane mode when you're in a podcast. You idiot. Okay, so here we go. So MSTR, when they started buying Bitcoin, when we said it was, 2021? Let's see here. I mean, the camera can't see it, but if we take a look at it, $20 stock, $25 stock, $30 stock. When his initial purchase, it went from 11 up to $100 in a matter of 3 months, 4 months.
Wow.
10x with Bitcoin, because Bitcoin was 10xing at that time too. Yeah. Not quite 10xing, but it was substantially going up. Since then, I don't know if you can you can see there, but I mean, we peaked out here recently for him, $430.
Wow.
That's unbelievable.
And is that because when it's traded on the stock market, is that the value of the company, or they're looking at it from a standpoint, is he buying back his own stock, which is driving the price up? Like, what is causing that stock to go up? Is it just belief in the company doing well, or is it just because that it's holding in Bitcoin?
Well, stock price is a reflection of future performance.
Yeah, partially. Yeah. So, well, it's what somebody's valuing that piece of the company. So you have a company, and then you have a certain amount of stocks. It could be 100, it could be 200, it could be thousands, right? So you take the company's value and you divide it by the number of stocks it has. There's preferred stock, there's regular common stock, right? So you break up that pie. The price of the stock is what, when someone looks at that piece of the pie, the piece of the value of that company, say you and I wanted to do a deal on MSTR stock here, we would basically argue by saying, I have mine for sale for $390, and you come in and say, for $385. And we do that on an exchange at the NASDAQ, or we do that at the Dow Industrial, right? And we agree on price, and stock changes hands. And that's how we come to a conclusion of what the value of that piece of company is. Now, how somebody or how people value the company can differ drastically. That's kind of like what you were saying. How much money are they going to make?
Yeah. Generally speaking.
Yeah. That's the market. Like, how much of the market do they own? What does their future look like? Those types of things. So with MSTR, with MicroStrategies, with Michael Saylor's company, $11. That's how much it was worth. He had $400 million in the bank. He had this very successful data intelligence company, and that he was Google, Apple, Facebook. Some of the major IT people were his major clients, and he was making cash. But it wasn't until he said, "We're going to now start saving our money. Our balance sheet, our cash, our savings is going to be in Bitcoin," that people started to notice that and say, wait a second, this guy over here, billionaire, smart guy, buying $400 million in Bitcoin. And from now on, anytime he gets cash, he's going to buy more. Well, this is Bitcoin on steroids. So what they looked at it and said, I can buy Bitcoin, or I can buy a Bitcoin plus Michael Saylor's company, his employees, his customers, his
performance,
his revenue.
His future performance, and then it's going to go up with the value of Bitcoin on top of it.
And mix that in with another aspect too. Is like people, some of you probably have a 401k, maybe some of you don't. But when you work with a company, you have this 401k individual IRA, and a lot of times those are directed, or the cash in those accounts is designated to only be invested in like stocks or gold or specific investments. You couldn't take that out without a penalty from the U.S. government to just go buy Bitcoin.
Right.
So what that did was open a conduit for 401k money, which is pretty substantial. Like there's a lot of money out there in retirement savings. You and me have 60, 70, 100, who knows how much money in this account. Now, if I bought MicroStrategies, I've just purchased Bitcoin.
So have other businesses done this?
Yeah.
Have there been, any other big names or any other big companies that have done this?
Yeah, there's a lot of big names. Like you have Strike, you have Tesla put some on their balance sheet. There's not that many big names that have gone full in only Bitcoin.
Yeah.
Okay. But there are several. Cash App, PayPal, who bought substantial portions of Bitcoin. All the major banks, BlackRock, right? They're buying Bitcoin and they're putting it on the balance sheet now. And that's what's happening right now. You're seeing institutional adoption. Michael Saylor really was the conduit that opened up companies to start saying, wait, there's a new asset class. I don't have to, this basket of assets, I can get this now. And it just changed everything.
He's using it as a store of value, which is interesting because this kind of dovetails into the Roger Ver conversation, is that Bitcoin as a store of value versus a peer-to-peer transaction only, right? It's meant to be used where I want that shirt, right? And I give you Bitcoin for the shirt, and then we exchange it that way. There's been this shift in Roger Ver's argument is around 2017. The conversation went away from it being a peer-to-peer transaction setup to a store of value, and how the block sizes don't allow because it's too expensive to do individual peer-to-peer, and how there should be a shift in the block size. And without getting too technical into the exact way that it works and the nodes and all those different things, not getting too lost into that, this idea of the store of value, what's your stance on if we look at it as a store of value instead of looking at it as a tool to actually facilitate transactions, right?
Yeah.
To actually purchase things, is that allowing institutions to come in like MicroStrategies or other institutions to where they can buy up so big of a portion of it to where now it still ends up, it's not fully decentralized because let's call it 20 individuals own 60% of the Bitcoins in circulation, and now they can manipulate the market no different than what kind of the Fed does today.
Yeah. Okay. It's super loaded conversation here in many fronts. The first thing that you have to understand about Bitcoin is its issuance schedule from day one. So in day one, a miner every 10 minutes could earn 50 Bitcoin, okay, for the first 4 years. Okay. So if you looked at the total amount of Bitcoin, there was 21 million available. All right. During the first 4 years, half of all of that Bitcoin, which is 10.5 million Bitcoin, were mined that first 4 years. Wow. Okay.
And they call it the halving, right?
This 4 year cycle is called the halving. At the 4 year mark, what ends up happening at a certain block height on the blockchain, the script changes and it says, okay, the block reward is no longer going to be 50 every 10 minutes. A miner now can earn 25 or 1/2 of what it used to. Okay. So now for the next 4 years, half of the remaining amount was mined. So we had 21 million. We went to 10.5 in the first 4 years. In the next 8 years, we went that next 10.5 got cut in half. So 5.25 million.
In double the amount of time.
Right. So in 8 years, you have over 15 million Bitcoin already distributed. Okay. So I want you to think about that in terms of I'm worried about its centralization. What if these companies get the Bitcoin first because they have the money to buy it? But in reality, come 12 years, here we are now, 15 years in Bitcoin, right? We've done 4 of these cycles. We're to the point now where a miner only earns 3.125 Bitcoin every 10 minutes, only for the whole world.
Yeah.
So the new Bitcoin available for purchase, new Bitcoin, 3.125 every 10 minutes. I think it's 450 a day, okay, for the whole world. So when you look at that, you look at the first 4, 8, 12 years, you start to realize that 17, 18 million coins were already purchased by common everyday people.
Yeah. Lots of random people.
And they were already distributed, meaning if you were into Bitcoin, you understood it, took the time to learn about it, you probably mined it, you probably traded it, you probably bought it, you accumulated it. And so there is this kind of, I don't want to say straw man argument because it's a valid argument. We don't want it to be centralized by anybody in any real way. But this idea that when 18 or 19 million has already been distributed, that BlackRock or the US government or someone's going to come in and buy up a big share. Like right now, the United States government, Trump administration's announced his SBR, Strategic Bitcoin Reserve. He wants to buy 1 million coins. Okay.
Yeah.
So out of that amount that's already been distributed, the only way he can get it or the country can get it is if they buy it. They have to buy it from somewhere. So in the process of these big corporations coming in and buying, they're pushing the price up every day. And as price continues to go up over time, and it will continue, it's the best performing asset in the last 15 years, bar none, full stop, nothing beats it. They are going to have to purchase it from these people. But when price goes up, they don't like to sell. They like to hodl. So price even goes even higher. And that's what creates these incredible price articulations, these spikes, because people are like, hey, I'm not selling. I'm never selling. And so there's this constant drumbeat of hodlers or people that hold on for dear life to their Bitcoin. And they just hold and continue to buy each paycheck. And this idea that these big organizations going to come in and buy enough to be able to take over, let's say they want to buy 10% of the Bitcoin issuance. In order to do that, you are going to take price to the moon.
Yeah.
And they will run out of money before that happens.
Yeah. Oh, interesting.
So there's one aspect of that, and it's important to talk through that. Now, the other thing is you said, hey, what do you think, peer-to-peer, or do you think store of value? And I just like to go into the hypothetical and say, like, if God was to come down or whoever, this limitless power person, and say, I'm going to make perfect money. And we just ask ourselves, what does that look like? And my answer to that question is the store of value and the peer-to-peer aspect of being able to trade it with anybody at any time with no problem. That's what we want to have together. We want our cash to be a store of value. I don't want my cash inflated to oblivion like it is now.
Just disintegrating in front of our eyes.
So this argument was used quite a bit because Satoshi Nakamoto, the original creator of Bitcoin, in 2009, the title says a peer-to-peer cashless monetary system. That's like the subheader of the Bitcoin white paper. So he definitely wanted it to be peer-to-peer in terms of the creator, but it doesn't mean that he didn't want it as a store of value either. And he references a store of value anyway inside the paper as well. So that's often used throughout the years during like the block size wars there was a period when we were arguing how you can adjust the size of the blocks and include more transactions in each 10-minute block. Excuse me. Or you can, or we can keep them small and we can just keep it where it's at. And Roger Ver was on the side of he would like larger blocks. Yeah. Because if we had larger blocks, then anybody could get in there with low transaction fees because the block could hold way more transactions, right? But on the flip side of that, if you did that and you made the block size larger, one of the fundamental components of Bitcoin is that every transaction from day one in 2009, when Satoshi Nakamoto started, each block has every single transaction in it from day one. So the idea of Bitcoin is that you can audit all of the Bitcoin, how it changed wallets and how it moved.
Where it went.
From the beginning of time till now. That's how every 10 minutes we can know for a surety that there's not 21 million and one Bitcoin.
Right.
We know there's 21 million. We know here are the wallets and we can see the pieces. No one can change this. But by changing the block size and saying we want to make it much larger, what would the result or the net effect of that would be? This ledger that I talked about, this literal ledger of transactions from day one, would be so much larger that in order to verify the ledger, I could no longer fit that blockchain, the literal blockchain, on a device like this.
Yeah, that was my question: is what that infrastructure would even look like.
But I think Roger Ver talks about was like, why would you even need that? Why does it matter if it would fit? I mean, wouldn't it just go back to there's going to be larger institutions that consolidate and what's it called when they basically audit the chain? It's like the turnover where it goes through every single one. I can't remember what the name of the process is called when they
there's like chain. You're not talking about chain analysis, like looking at the chain itself.
No, it's the validation of the chain.
Oh, hashing the transactions into a block?
Yeah, into a block.
Yeah.
He's saying there's no real reason for you or me to do it, right? Because there's other institutions, mainly miners, that are going to go and do that on their own. There's no real reason why you and me need to see the history of all the transactions ever, because the chain is going to operate that way one way or another.
Yeah, no, it's a great question, and this gets you thinking about the fundamentals of Bitcoin and its decentralized nature. The reason why you want to be able to audit, whether you're a miner or you're a node or you're an individual, the reason why you want to audit is to make sure that the blockchain hasn't changed. So when the block gets larger and the amount of terabytes it takes to have the whole chain together gets so large that the common person, or anybody for that matter, you have to have server banks. Imagine 100 years from now, imagine how many transactions we're talking about here. You would have to have a server farm full of hardware to be able to do that. So the bigger threat during the block size wars was thinking in terms of what if it gets so large, in order to buy a device large enough to carry the blockchain, you're spending $1,500. What's the net effect of that? And that is that there will be a whole lot less nodes, meaning people that validate the blockchain, and there'll be a whole lot less miners because you need this actual infrastructure to be able to run it. So therefore,
but as we get closer to that 21 million, not to cut you off, but as we get closer to that, the infrastructure is going to shift, because as we get closer to 21, we're going to get to 21 million. It's like 2035 or something like that.
2035, 99% of all Bitcoin will be mined.
So those miners that are using the computing power to mine, there would be a shift over into the infrastructure to where those would be the individuals that would be doing that computing power, right? That'd be part of the infrastructure that was created during the whole process, right?
So you're right. Bitcoin can change, and it changes a lot. This idea that Bitcoin never changes. There's actually there's Bitcoin protocol, or they're called BIPs, Bitcoin Improvement Protocols. And these are developers, people that all contribute to the Bitcoin script. Bitcoin can change in the future. Yeah. Like, meaning we could say once 99% of it's mined, or once, I don't know, the last Bitcoin's mined in 2148, they could say, yeah, at this point, we're going to change the block size so large that we could handle 200, 300,000 transactions a second.
Yeah.
Because that's what really we didn't explain that for the audience, but what this really comes down to is there's only so many transactions worldwide that can fit in any given block.
Yeah.
So Roger Ver was saying, and it's a good argument, he's like, hey, if it's peer-to-peer, we need to be able to buy a coffee, bubble gum. We need to be able to do every transaction. The Visa network does 200,000 transactions a second.
Yeah.
Okay. That's a private company. That's their servers, right? Well, Bitcoin doesn't come anywhere close to that, like nowhere close. So his argument was just like, let's make the blocks larger. We can fit a lot more transactions in, right? And therefore it will remain more peer-to-peer, and you won't be paying, because that's another component of this, is that when the blocks start to fill up with transactions, we're all competing to be able to have our transaction processed or confirmed.
Yeah.
And that means paying a transaction fee. Once the block fills up in size, then whoever pays the highest transaction fee gets in the block. Everybody else just sits waiting for their opportunity.
Which, in his argument, Hijacking Bitcoin is a book it's really dense, it's really technical, and that's why I wanted to talk to you about it, because I'm like, man, it's like you got to speak a whole nother language, and I think most people are still in that camp. It's like, I don't understand crypto because it's like speaking a whole nother language, right? And so he was saying how businesses weren't able to use it as a peer-to-peer transaction and use it for selling services or goods because those transaction fees got so expensive, and that there were chargebacks, right? By the time, the waiting for the node to be logged, the transaction fee would jump, and then the cost of actually sending that gift, that product or service, would end up being more expensive, and then the business was either having to recoup that money or just charge that person more money than what they already agreed upon because of the difference in time, right? And we're talking seconds, right? And so it was really difficult to actually make it a peer-to-peer transaction because the block size wasn't big enough.
Yeah.
Right?
Yeah, that's that's where the advent of all these other cryptocurrencies kind of come from,
because his fork is basically Bitcoin Cash.
Yes.
So it's basically purely off the Satoshi Nakamoto's white paper.
Yeah, the original ethos of
and then
Bitcoin.
he just increased the block size. This is essentially how Bitcoin Cash operates. And so you have these different protocols, these software developments on how they work, but that's where these forks come in, right?
Yeah. That's where a fork can come in, which is basically, I'm going to take the original Bitcoin blockchain up until this point. I'm going to make an exact copy, and then I'm going to start my chain from that point forward. So it's backwards compatible. Look, Roger Ver has the great arguments, and he's Bitcoin Jesus. That's literally his nickname, because he was known to give away one. I mean, I was at conferences with him in San Francisco pretty early on. I remember him giving out 1/10 of a Bitcoin to almost anybody that going up and asked. He ran what is called a Bitcoin faucet on, or contributed to the faucets on the internet, which were literal places you could go there and just like press a button. It would turn this little faucet on, and a Bitcoin would come out, and you could like literally download it.
Nice.
Like full Bitcoins, full Bitcoins, right? Like 5 you could download up to 5. So look, the guy did so much as evangelist for the movement, and he has a etched in stone
place in history.
Yeah, absolutely.
Yeah,
we all have respect for him, no question. On the flip side, there was this block size war that we're talking about between the kind of small blockers and the large blockers. This went on for quite a bit. Yeah. And both sides were heavily trenched. There was a lot of movement back and forth with influence. At the end of the day, it shook out like this. And, whether or not Roger Ver is going to be proven to be right in the future or not, or the opposite side, I think really at that time with the people involved, they did shake it out. And, his book does go into some things like, hey, this was corrupted. This, like the way they went about it was kind of sneaky, or this. And the other side says the same thing about him. Yeah. There's people that say he's a CIA agent. They were trying to co-opt it. So both sides are entrenched in this. What I would just simply say right now, with the new technologies that we have, server sizes are getting monstrous, meaning the block size, it's not as big a threat as it used to be. And Moore's law continues to play out. Technology improves. We'll have bigger hard drives. We'll have new forms to, crystals and different things to actually save data and bits on. So I think the future could include a change to that. On the flip side of that too, you have these second layer solutions, whether it's Lightning or whether it's Solana, XRP, some of these other types of coins. It's really simple. You trade your Bitcoin for one of those other coins, Bitcoin Cash even, and you can go use the network. Yeah. So Dogecoin's a copy of Bitcoin. Litecoin is a copy of Bitcoin. Bitcoin Cash is the original block size, or a larger block size, but everything else is the same. That's the change. Yeah, exactly. So it's almost one of those things. It's like, what's going to play out? What is the free market going to decide is the most sellable good? Yeah.
And right now, it seems like Bitcoin has the first isn't always the best, right? We've seen that time and time again, especially with new technologies. But at the same time, that institutional adoption with Bitcoin taking just such a far and ahead lead of all these other crypto options, it seems like Bitcoin's far and away the leaders. The adoption is going to be there.
Yeah. You say the first isn't always the best. And I got thinking about this. It's like, like the first time the will was used or invented. Was there a better wheel? I've seen some iterations where the wheel goes sideways and like some weird looking wheels, right?
Yeah.
Or fire.
Fire is the first. I don't know, a nuke. This is a little bit better of a fire.
So what I'm saying there is like there are some things that once it does that thing, it's the best. You don't need to diversify it. You don't need like. Am I going to go buy three iPhones just to make sure that if one goes down, the other one's going to work?
Yeah.
Or
the first iPhone compared to the newest iPhone isn't the best iPhone.
Sure,
right. And so it's the evolution of the technology, or the use of, I mean, just we could use gold as an example. Is it, gold was used, but it wasn't the best because the description of how do you move, a $3,000 worth of gold. Well, it's easy now because it's a fit in your pocket, but $1 million worth of gold, it's harder, right? But is that the best form of that currency?
Fair.
There's been newer versions of that technology, monetary technology that's come about. And this goes into like it's a software conversation, right? It's like which piece of software is best built and best utilized to do this in an efficient way and that gets the most adoption. Right.
Yeah.
And that's the competition, I think. That's
or store of value. If you look at Bitcoin as a store of value, if you can think of a way to improve Bitcoin, go for it.
Right.
Show it. There's over 22,000 cryptocurrencies past Bitcoin after Bitcoin's evolved. Bitcoin continues to be the one that demands the monetary premium of the world. In this asset. So like
by far too.
And you know what? Bitcoin doesn't care. The protocol doesn't care.
Yeah.
There's no owner. There's no person controlling that it's decentralized in a way that the script itself doesn't care if a better one comes along. What's going to happen when that does is money will move. When there's a better airplane, you're going to get off the train. You're going to get on the airplane. There's a better means of transportation. There's a better way of doing something. Absolutely going to happen. But right now, as we see right now, the first one still is the best option for store of value.
Yeah.
In the first 15 years of this nascent technology.
Yeah, for sure. I think so too. This might sound crazy, but I hate real estate agents. And after being one myself for the last 10 years, I know the good ones from the bad ones. If you're thinking about buying, selling, or investing in real estate here in Southern Utah, we want you to interview us for the job. Go to realestate435.com and give us a call. We promise you're going to love us. Because you were talking about how city governments already kind of diversify their money into a bunch of different asset classes, right?
Yes. Cities are kind of actually constrained to what they can use tax dollars for. It's generally bonds or cash deposits, so agency bonds.
And that has to be changed at the state level if they want to.
Yeah, it's constitutionally mandated. Like you just can't take and be risky. If I'm going to tax you and take your money and put it in an account, I can't just go take risk with it in a way like fiduciary. As the fiduciary of the city's taxpaying dollars, got to have that ready so we can use it on capital projects, whatever we need. So it's really limited what you can do. So right now, Bitcoin is not one of those things that's available for all the, all these cash funds. But state pension funds have applied to allocate 1% to 3% of their funds into Bitcoin.
They apply with the state?
Yeah, they basically... I don't know the nuanced processes or procedures that they have to go through to get approval. The state pension fund in Utah is going through that process right now with the state legislature, basically getting a law passed that gets that asset class available for investment,
even at a small level. But it's baby steps. We're still taking baby steps.
Yeah, super baby steps for sure. And like pension funds, state funds. Even Fortune 500 companies like Michael Saylor's, like the amount of money that they actually are sitting on is spectacular. Like I think Apple has almost $1 trillion worth of cash. You look at Berkshire Hathaway, you look at the state funds and these pension funds, they're giant funds, Social Security Administration. So when they want to make an allocation into a new asset class, which by the way, we haven't had a new asset class for a very long time.
Right.
Like we've had stock, bond, we had this limited basket.
Yeah.
All of a sudden here comes Bitcoin along and says, I'm different.
Well, it's like index funds, right?
Yeah.
Like index funds was
ETFs,
really,
yeah.
that was kind of like the last one, really, right?
ETFs is
ETFs.
you nailed it. ETFs has been kind of the last, like, okay, I can have exposure to gold, but I don't necessarily need to buy the physical stuff.
Right.
Yeah.
So that was
I think Vanguard invented the ETF, right? Like in the mid 90s or early 90s or something.
Yeah, those were amazing. Mm-hmm. Those are a great opportunity for the average person to get exposure to new assets, whether it was metals or whether it was other assets.
Which is interesting because they only came about because of the computing power, right? It's like an algorithm, right? Essentially, it's like software ability to diversify up into these little slices, and then you're sharing the risk in a package, which is interesting because it's similar to Bitcoin in a way, right? It's a software ability, it's a technology advancement that's allowing us to diversify these assets, which is interesting. I didn't really think of it as far as asset classes, like a new asset class. Like, is there going to be another one? Like, we keep finding new ones. Is there going to be another one?
Yeah, for the longest time, everybody dismissed it. Like, oh, this internet money, play money, like, presidents and influencers, like Michael Saylor.
Yeah.
Like, we have the saying in Bitcoin that's like, a person's ready to buy Bitcoin when they're ready to admit that they're wrong about Bitcoin.
Yeah. That's a good point.
And I'd like to go in this if we can. This has been my mission for the last, I'd say, since about 2017. I'm trying to get people to understand what this stuff is, and so they can at least know and make an educated decision when it comes to buying some or being involved or not. And what I would just like to say is I'm trying to get people to understand the future. We started talking about AI in the very beginning of this. Don't know if it's going to make the podcast, but AI is taking over everything. I mean, I have a car out front right now, a Tesla, that communicates with parking stalls, with chargers. It can buy its own things, right? Attached to my card, but it can buy its own things. Well, the future is AI, machines, and artificial intelligence purchasing things and doing its own business. Okay?
Yeah.
AI is not going to come to Aaron Olson and say, hey, will you help me out and open a bank account with Wells Fargo so I can do some business with this sovereign fund over here because I need to send him some premium for what I just purchased in insurance premiums. AI is not going to wait for me or humanity with a social security number and to create in this old archaic 19th century system to do business. All AI needs is an open monetary protocol that is completely diversified, permissionless, and open. And they will buy their own Bitcoin. They will open their own wallets and they will do their own business. So if the world is trending increasingly digital, if it's moving to this time frame in the future where the things in our lives will do business with each other, then it will need a way to do that without humans or without the bank accounts attached to them. And the good example would be like Tesla insurance right now. If you own a Tesla, you can buy insurance from their company. Mm-hmm. Well, Tesla knows how fast I drive on a Monday on the way to work. It knows how much weight is in my car right now, if there's 3 people in the car or 5 people in the car. It knows if my car's parked currently on the charger or not. So imagine now if my car purchased my insurance for me. I'm talking about my driver's insurance, right? Imagine if I only purchased the amount of insurance I need for what the car is doing. The car's sitting in my garage. I'm not going to hurt anybody with the car in my garage. Mm-hmm. So why am I paying an increased premium during that time frame that it's sitting in my garage?
I didn't even think about this.
Like daily, weekly,
hourly,
seconds.
Secondly.
So what? You throw Starlink on top of it, and then they're all communicating together.
Or in other words, you get your car's. You go on a cruise for 2 weeks, your car's sitting. You're not paying a dime for insurance while the car's sitting, but you come home, you get in your car, throw your kids in the back, and then the insurance starts rolling a little bit.
It's streaming money.
Dude, crazy.
Well, you take it to like houses, right? Like
money.
Home insurance, health insurance, right? Like I'm wearing a Whoop strap right now, and it's, monitoring my VO2 max and how much I'm sleeping and,
Well, yeah, like insurance premiums, this
how
is a whole
healthy
other
I am.
Conversation. Yeah, but like how healthy you are. But like, a normal insurance premium is paying X number of dollars, call it $5,000 a year, to never go to the doctor.
Yeah.
Correct.
Yeah.
So with this, right, if machines have the capability to use a protocol that's not controlled by a board, by a license or by a government. Now the machine,
or an era where this is just the way we've always done it, so we're just going to do it. We're just going to keep doing this.
Social security numbers.
the machines can act on themselves. They can act by themselves. And this will enable streaming money. Right now, there's podcasts that I listen to in the Bitcoin space that literally when I listen to them, I have Satoshis, which is the smallest unit of Bitcoin. It's 1/100 millionth of a Bitcoin, less than a cent. But as I listen, every second I listen to, Satoshis stream to that content creator. If I listen 10 minutes, so many Satoshis come out of my wallet as I listen. So now when I'm buying music, let's say from the App Store, and I only listen to Taylor Swift's first 50 seconds of her 1979 song or whatever. I don't even know what it is, right?
Sounds like you know the song pretty well.
I have 3 daughters, buddy. Okay.
Nailed it.
The point is I only have to buy for the amount of seconds I use the songs. I only have to buy insurance for the amount of time that I'm driving at 100 miles an hour, and I'm going to pay a premium for that, right?
Yeah.
So now you get this ability to equitably pay for what you're really getting, and without dispute. Like it really comes down to that. So coming back to this, the future is programmable money. The future is streamable money, and Bitcoin enabled this. It was the invention of Satoshi Nakamoto in the 2009 white paper that allows this to happen. And because this is happening, I plead with anybody in Southern Utah. I don't care how old or how young you are. I beg of you to learn about this new asset class, to learn about this new technology.
And you teach a class at Utah Tech.
I do actually teach a class. And thanks for the plug here. Utah Tech University has community education classes. Great program. You pay almost nothing. A lot of the classes are 15, 50,
a couple of Satoshis.
A couple of Satoshis.
A couple of Satoshis.
8 weeks of class. But yes, I teach a Bitcoin 101. I teach a Bitcoin 201 class, advanced and technicals of Bitcoin. And in those classes, I'm just going to tell you right now, I've had as small as 20 people in the class, as many as 90 in the class. Or
all age ranges?
All age ranges. In fact, I'm going to tell you right now, the community education classes skew older.
Right.
Most of the people that attend there are 55 and older for sure. But I will tell you this definitively, 99% of the class, by the end of that course, they are buying Bitcoin because they finally fundamentally understand how this is going to change the world. And it blows my mind. People that you would never believe would sell their gold or sell their bonds or their stock are buying substantial portions of Bitcoin right here in our community.
Yeah.
Like 4, 5 Bitcoin at a time.
Yeah. Right, and it's trading at like 85 grand right now.
Yeah. It's not a joke. Mm-hmm. The first classes I ever taught, Bitcoin was 20,000. And by the end of that class, it was in the 40s. A lot of times we start way low, and by the time we're at the end, right? This class, actually, we started low. We started in the 70s, 58 or something actually at one point. Went all the way up to 109. We're back down to 80. So we've kind of gone this whole, like, this emotional thing.
I've been through it so many times. I've been through it. You know, I bought it, I sold it, and I bought it, and I sold it. And even the first guy who really like pushed me to do it, he was like, just buy it and hold it. And I couldn't do it. I couldn't just hold it. I should have just held it.
Yeah. My license plate says hodling.
Yeah.
And the reason is because I've learned that lesson too. I have less Bitcoin than I ever had in my life.
Yeah.
And it's because I sold it thinking in fiat terms, thinking like, oh, I got more dollars now. I'm going to go out and spend it.
Yeah.
And that I learned the lesson. And because, man, if I would have kept on to it, I would be able to do so much more in my life with everything.
Yeah.
Not just for me, but to give to people to do things. So I would encourage anybody, and in the reach of this audience, to, even if you're not taking my class, you don't have to take my class. But the point is if you want to learn, start with the Bitcoin Standard or start with The Bullish Case of Bitcoin, 2 fabulous books, or go to Michael Saylor's website that he's devoted to Bitcoin, which is hope.com.
Hope.com. That's the thing about this Bitcoin. It's also, and this is taking us on another tangent, which is talking about the blockchain, which is a completely separate, because you talk about the stream of money, and I wanted to jump there before, but I'm glad you got to talk about the class because, you know, talking about money is a difficult thing. we're going to make mistakes. People, it's a complex set of financial, the market, right? The financial market is so complex, and a lot of people just think it's either so over their head that they just don't even deal with it, and they just go to work and they just make their money and they save their money. But Bitcoin is we're in this revolution of a new asset class, and you have Trump making laws on it, and you have a reserve, a Federal Reserve that's stocking up on Bitcoin, and maybe they'll get rid of all the gold in Fort Knox and turn it into Bitcoin. Who knows? Who knows exactly how this is all going to, filter out. But the blockchain thing is, I think, is a subset of the technology that is really going to impact our lives in the digital world, right? Going back to this insurance and how when we can verify ourselves in the digital world as an individual, we have social security number right now, but we all can have our own individual crypto number is what my thought is that anything that we do on that digital space doesn't have to have personal information, but it can follow me along, and I can have this identity, this digital identity that is validated. Because I think of like Twitter and Facebook, and I see these views, even on the podcast, whether I look at YouTube and I have this number of views and people, this reach, and I'm like, how many of those are robots? How many of those are just like made up? But we haven't committed to this. Why can't we just validate our individual selves into the digital space on a blockchain type thing? Have you thought about that at all? Or
yeah,
am I?
You're thinking great, because it already exists. Just most people don't know it exists. So, for example, the social media version of this is called Nostr, Nostr. Okay. There's several different clients or apps that you can access the Nostr protocol. But what the Nostr team did was take Bitcoin and said, instead of sending Bitcoin, what if we just sent tweets or posts or podcasts? And when we send it, how do you know it came from that person? Well, they're going to sign it just like they sign a Bitcoin transaction.
Right.
So they have basically the same infrastructure that allows somebody to hold their own keys. Yeah. And when a message comes out purported from that person, they can sign it with their own keys, and you can see and validate that person does own that message.
Yeah. So one of the things we talk about in the real estate space is like chain of title and title insurance, right?
Yeah.
Have you heard or involved in anything?
Because to me, it seems so obvious.
Yeah.
That like all of these physical assets, like if I'm the county recorder, in my mind, if I was the one in charge, I'm like, we're going to take every single parcel, every single structure, every piece of dirt in the county, and I'm going to issue, and you could put it on Ethereum, right? You could put it on that chain because it's specifically made for contractual, like large purchases. It's not meant for peer-to-peer stuff. Ethereum is specifically designed for, selling businesses, selling large assets. Every parcel, every little square inch of land onto the chain, and each one of them is issued out individual identifications.
Yep. And
then now you have this digital record of it, and it's not.
Yeah, because we've got all of these. There's a bunch of title companies. They all have physical locations. There's a ton of paper that's printed like at a real estate closing, right? And it's like you could eliminate all of that.
You can eliminate all of it.
All of it. And
not that I'm advocating for eliminating people's jobs. Right. But
you're not.
It's the nature of the beast.
But technology is going to do it regardless, whether it's that or something else. So yes, India announced this week that they're putting all their land on the Avalanche blockchain.
Interesting.
And
I didn't even see that.
You can read about it. I just pulled it up here again. This is 1 week ago. There's a lot of...
This is India.
This is India.
People, we can do this.
It's going to happen.
Yeah.
There's already a parcel number with Washington County, right?
Yeah.
It's that, that SL number. What is it? It's like, I think of Desert Color. Like Desert Color, if you're in Auburn Hills of Desert Color, it's like something like SG-SAH for Auburn Hills dash the phase number, which is 7 dash the lot number 703.
Exactly.
And that's the convention that the county uses for these parcel numbers, right? So we have the number, we have the serial number, right?
Yeah, we can
validate that. So now instead of 21 million pieces, you have however many parcel numbers, right? Now, when you want to do a transaction, you have a wallet, you open up, and we're transferring from your wallet to mine, and we can see it on the blockchain.
And if I'm buying your house, right? One of the purposes,
of land,
piece of land, whatever it is. One of the purposes of title insurance is to protect me from any liens or encumbrances that you may have a claim on your property. But instead of going through this whole process of title searching, it's point click. Oh, hey, you have a $2,500 tax lien on your property,
and it's registered right here on the chain. And this is the member, but that's where the lawsuits come in, and the insurance is supposed to help you protect you from lawsuits. Is that this title company is now going to say, I'm going to make sure this is free and clear title. But if somebody else comes in later on and says, no, this is actually my ancestors' land and I wasn't given the opportunity to take it or whatever. But how often does that even happen? I don't
Back east quite a bit.
Yeah.
Okay. When you have an actual land history of deed movement, there's actually quite a bit of that occurs. But I always chuckle in the frontier west out here where we're building fresh lots, and it's like, I'm going to pay title insurance to double check that this went from Sitla over to Sitla to Aaron.
I mean, even in Utah,
even
in Utah, there's two policies. If you get a loan on a property, two policies are issued: one to the buyer and one to the lender. They cover the exact same thing. I don't even understand why they do it. It's just about the money.
I mean, the lien side of it is where you could make an argument like, yes,
as a lender, I want protection on that. But why is the seller paying for title insurance to the buyer?
Yeah,
it doesn't make sense. And the buyer's buying title insurance to the lender.
It's going to change. It's going to happen. They're going to validate all the property ownership at a certain time, upload them to a blockchain, and then that blockchain right there will be maintained by either the county or the city or the state or even the nation. The thing that I would say is, like, India using Avalanche as blockchain. There are certain technologies or side chains or cryptocurrencies that or tokens that they can use this on. But then it comes back down to the immutable nature of Bitcoin. The reason why Bitcoin continues to be a store of value is because it is the hardest one to change. That's the hardest, like to co-opt 51% or more of all the miners in the nodes to make a change on the block, or change on the block, or audit, or not audit the block, but change the block, the actual ledger itself. Right? In order to do that, you would have to change all these validators. And in 10 minutes, you'd have to make the change, and you have to have all of them make that change
at the exact same time.
So when you start thinking about a government holding something like the land records, you have to wonder, okay, well, who has the access to make the change? Okay, this actually who can make a change to the block?
Oh, interesting. Yeah.
So that's where you start evaluating. If you're going to put $100 million, $200 million in a protocol up in cyberspace and call it digital gold, Michael Saylor's, here's 400 million, or here's billions of dollars, right? If you're going to do that, you want to make sure that no one can make a change to that.
Whereas now, I mean, I've even seen with my own eyes, either typos or whatever on county records, and to get that changed, it's just one person goes into the system and changes it.
Yeah, just
theoretically, somebody at the county recorder's office could just go in and put my name on your title of your house, and then I would own it. Theoretically.
Without naming any banks, right? We know one recently that had all of its, basically its customer service representatives opening up, or its tellers opening up accounts and loans in the customer's name without them knowing. You go to Lowe's or Home Depot and you go buy a gift card, and you give it to your daughter or your son, and they go in to use it, and they're like, I'm sorry, sir, there's just nothing on here. What are you going to do? Argue with Lowe's and their record and their ledger? Or are you going to independently validate it with your own node, your own decentralized node?
So I guess there's it's more complicated. It's not as simple as that. And so then it says your own individual, like Nostr, your own individual identity key, right? It is decentralizing that, is who has control over what that protocol actually looks like.
So when you start a Nostr account, or I'm not going to say X or Facebook, but the equivalent, okay? It's a social media platform similar to Facebook. If you go to Nostr right now and you start an account, you get you get some keywords like Bitcoin. You have 12 words or whatever, 24 words if you have higher security. Point is, you got 12 words. That's your key, and you hold that to yourself. That's the encryption key to the message. When you post the message, you sign it with that encryption key, and then everybody in the world knows, like, this person was the person that said that.
Yeah,
he's the only person with that key. So it's an interesting thing, because now we can start signing what we say, because the future is we're not going to be able to tell this was talking to you, your daughter or a bot.
Exactly. Yeah. I mean, the ability for AI to pose as somebody else is gotten infinitely better just in 3 years. And it's
so good.
And we're just so early on. It's still going to just continue to get better. And so we need some kind of backstop to prove who we are in that digital space. And so it'll be interesting to see how that follows through. One question I had, this takes us back, but what happens to first 4 years, 10.5 million Bitcoins are issued out? And you got the guy, I don't know if it was Roger Ver, you said the faucet, they're issuing out. What happens to all those Bitcoins that they just go into oblivion? They're gone. Like nobody's like, oh yeah, I think I got one of those one time. There's a piece of paper running around here somewhere.
I'm so glad you brought this up.
What happens with that?
That was another part of your question that I wanted to weave in there. And that is, we all talk in terms of 21 million Bitcoin, but in reality, right now, it's about 16.8 million available circulating coins. Where's the difference? The difference is, we know there's been several hundreds of thousands, millions of coins lost in what you're just talking about. They've never moved on the blockchain, because you can see when a coin moves from one wallet to another. They've never, ever moved. We know that people have lost. The famous one is the guy in London or over there in Britain somewhere that threw away his hard drive.
Yeah, I was just thinking about that. Yeah,
I don't know how many. I don't think
it was a lot of money.
70,000 Bitcoin. I can't remember what it is. It's at this point, it's a legend almost. But
and he's like he's literally in the dump, like searching through the dump, trying to find it.
He went and found some investors and said, "Hey, if we find this is the bounty, billions of dollars.
Yeah.
All we got to do is find it. I know it's here. Here's the proof. I can show you this." And he found people to spend millions of dollars to go bag by bag, slowly through all the trash in this landfill.
Yeah.
He's still looking.
So what happened? So with that, that's just gone. It's going to shorten the supply.
So
essentially,
for all those that are listening and trying to understand Bitcoin terminology and learning about it, there's always 21 million Bitcoin. What has been lost is the ability to sign the transaction to move that Bitcoin out of one wallet to another. So we still see all 21 million. They're still there. But what's been lost is that person's ability who previously controlled it to be able to sign a transaction, because they've lost their password.
Got it. Okay.
So when you think about it, now we're going to get really exciting, because this is what I'm most empowered with with Bitcoin, is that it's really the words that you come up with, those 12 words. That's your Bitcoin. And now you start crossing that over with free speech. And now when they start saying, how can you tax speech? Like literally, the Bitcoin are still up there. I never take possession physically of any Bitcoin. I have 12 words, and these 12 words allow me to basically move in the ether and cyberspace, move from one wallet to another, a certain amount of Bitcoin. But it's words that do that.
Interesting.
So now you're starting to see it, like literally 12 words controls my net worth.
Wow. It's pretty heavy.
Yeah, I'm going to have to digest that one. I need another energy drink. I need some caffeine flowing.
I'll let you digest on this right now. Probably both of your net worth is controlled by one of any big bank.
Yeah.
And
that's what I was thinking. That was what was going through my head.
And you blindly let it happen, and you're okay with it. And if you're going back to our last...
we could just call it the Federal Reserve. I mean, technically...
The last time we talked, we were speaking about The Creature of Jekyll Island, the book.
Yeah.
And that's ultimately, we've allowed these institutions to hold your money, to rehypothecate it, to basically duplicate it by lending it out. You give me money as I'm their bank, I take your money, and then I give it to someone else in form of a loan. But if we all went back to the bank and said, where's our money at, right? We learned that there's not enough money to cover that.
Right.
So right now it's like, it's heavy to think that 12 words may be your net worth, But it's even heavier for me to think that some 20-year-old something is sitting right now, has full access to these computer ledger of a certain bank and could make an entry, could make a change, or get seized by a government or anything.
Yeah, just debank them. Just be like, oh yeah, sorry.
At any
We're not
given
working with
time.
you anymore.
Like,
Well, and then that even goes back a little bit deeper to what you said earlier about the government taxing land, right? If I pay my house off, all my cars, I don't have any debt, but I fail to pay my property taxes, the government can come and take my property.
100% correct.
So you never own.
But their argument is that they owned it first. That's their argument.
If we really fundamentally look at ownership, think about it.
Possession is 9/10 of the law.
Possession is it's limited by your ability to protect
Yeah.
confiscation of that thing, that said thing. So like a jaguar kills something and drags it up the tree. And then the next predators come in, and hyenas or something says like, hey, I want a piece of this.
Mm-hmm.
You only own something as long as you control the full control custody of that asset.
Mm-hmm.
So when we start thinking about who controls the dollar and how they can get it back from you, or if you don't pay taxes, what happens? Well, if you don't pay taxes, what happens?
You go to jail.
Is you eventually go to jail. And if you say, I'm not going to go to jail, I'm going to get in this bulldozer and catch me if I can, then comes the violence part.
The killdozer.
Right.
And the crazy thing about it is like, that's another aspect of Bitcoin that removes the violence incentive. I can no longer go to a country or to a person with a gun and say, give me your money.
Yeah, you said this on the
shoot
last one.
you.
This is a powerful analogy. Yeah.
Pick up your goods, your physical money, and walk away with it. Because if you shoot me with my Bitcoin, my 12 words die in my head and nobody else has them per se.
Yeah.
They can't get them.
Mm-hmm.
So they've lost the incentive to go in there with force or with violence to do that. So when we're thinking about our future and a peaceful society in which this theft thing happens or doesn't happen, getting closer to that ethical money where the individual, no matter how small, can take full custody and fully protect against anybody else the value of their saved energy, it's an extremely powerful idea.
Yeah, that really is. Man, that's a good one to end on, honestly. I think that drives.
We can't do much better than that.
We can't do much better than that. I encourage, just like Aaron was talking about, take your class. I think I'm going to sign up for your class. When's the next class start?
Would love to have you. It hasn't been announced yet. I think if they don't announce a summer class, it'll be fall. It's
Okay.
for sure fall semester. It'll be there. Utah Tech, community education, Bitcoin 101. And you'll see me there. If you want to reach out to me outside of that, I'll get you the information on the podcast. We can put it in the notes of the podcast.
Awesome.
And then that way too, I also offer and help people at any level that they want to get exposed or new, because I'm interested in our 435.
Yeah.
I'm interested in our community of real people, real stores, real individuals doing business in Bitcoin.
Yeah, understanding it and knowing like, hey, this is something that's functionally where we're headed on the world stage, but the faster we adopt this in the community, I think the smoother the transition is going to go.
I want peer-to-peer like Roger Ver right now between us. I'm going to buy a monster from you or whatever. Mm-hmm. Like when I go out to my lunch with my buddies that are Bitcoiners, one person buys, everybody else puts Lightning payment Bitcoin back to the one person.
There you go.
The point is here locally, we can have an alternative currency just in case.
Just in case. Sweet. Thanks for coming on, man.
Yeah, thanks for having me. I
it.
really appreciate both of you.
Hope you enjoyed this episode, everybody. We'll see you out there.
Thanks.
Sweet.
That was awesome.
Thanks for listening in. If you enjoyed this episode, please like and subscribe. Make sure you're following us on all the social media websites. We love your support. We love the dialogue. We want to continue that going.
Find us at realestate435.com. We'd love to help you find a house here in town or help you get wherever you're going.